Welcome to the Beginner's Course Remastered, Lesson 3, Levels. Alright, when you're talking about levels, you have to define two terms, support and resistance. Support, as the name implies, acts as an area of support where you would mark a level, maybe something like accumulation from what we learned in the last lesson. You would mark a level of support where you don't think the price can go any lower, hence giving you your level of support. With resistance, you would do the exact opposite. Just like in our last video, you have an area of distribution. This is where you would mark a level that looks like an area where price maybe can't go any higher, and therefore you'd have distribution happening at the resistance level. It can only go so high for resistance, and it can only drop so low on support. As the name implies, support supports the price from going too low, and resistance resists it from going too high. So those are the first two terms you have to talk about when you start thinking about levels. Support and resistance, the bottom and top area where a stock can travel to. When thinking about support and resistance, the first logical thing that comes to mind is, well, why does price get respected at these levels? Well, this is very simple. Support is called support because it's typically the best price you'll ever get on the stock, hence accumulation from what we learned in the last video. And it's going to be where people can make the most amount of money by buying it at the best price possible that they believe it's going to go to. So you could have a stock, and we're going to use the $2 to $8 example that we did from accumulation and distribution video. You could have a stock that's $8. At $5, it might be a great price. At $2, it might be an even better price. At $2, it might be an absolute steal. This might be such a great price for the stock that, hey, guess what? I don't think it can go any lower. So we mark a level of support. However, you might also have people who are willing to buy at $1. So maybe that stock sits at $2 for 3 months. Then it eventually drops down to $1. Well, these were both levels of support. The $2 area supported it as a level, and then that collapsed and failed, and it went all the way down to $1. And that $1 area was the next level of support. So when you think about, well, why do prices get respected here? Typically, it's because investors or day traders want the best price possible, and they're simply not willing to overpay for a stock. So they mark levels on their charts, and they set buys appropriate to those areas. The levels where the most interest might be had. Opposite to these support areas of interest, you have resistance areas of interest as well. So this is great because resistance areas of interest, they act as a target for trades. Maybe that $1 purchase that you got on the stock that collapsed from $2 all the way down to $1, well, maybe that has a really great area of interest up at around $8. So this acts as resistance. In the exact same way that people wanted to buy that stock down at $1 and $2 marking areas or levels of support, they also have levels of resistance that they don't think the price can go any higher than that. Maybe it can go to $8. Maybe we could even get lucky and it can go to $10. So they would mark these areas as levels of resistance or targets, as known from the last video as distribution, where they'll use that level as their sell target or their resistance target to distribute their stock. So some of them might release the stock at $8 because they think that's a level of resistance, but it pushes above that and goes to $10. That $1 stock all of a sudden sold for $10 and it never pushed past $10. Well, that $10 area was a level of resistance, just like the $8 area was. So on the bottom of your chart, you had a $2 level of support and a $1 level of support. And on the top of your chart, you had a $8 level of resistance. Well, maybe the stock isn't done there. Maybe after hitting $8, it actually pushes all the way up to $10 and it hits another level that we marked on our chart. Same thing that happened to us on the bottom side of the chart on the support levels. We thought it was going to $2, but it actually dropped all the way down to $1. So we have a $2 level, but it dropped down to $1. We have an $8 level, but it went all the way up to $10. Well, this is the great thing about levels, is that you can have multiple levels on your chart, and sometimes the levels that you mark actually get passed. It doesn't mean they didn't exist. It means they got hit, the level got respected, it had an action, and then it had another reaction that maybe pushed it up past into the next level. So that's the great thing. You can have multiple levels on your chart. It's just about knowing which level is going to get hit. And as you get better as a day trader, you're going to have many levels on your chart, and you're going to be able to pick the exact one that gets hit every single time. Also tying into the idea of accumulation on the bottom, distribution on the top, completing not only the cycle of accumulation and distribution, but now tying levels in so that we have appropriate areas to mark these areas of accumulation or distribution. So now that you know what levels of support and resistance are, let me share an amazing tip with you. We're going to use the scenario from our last video that we created of a stock that ranges from $2 to $8 and tie it in with what we talked about today. Maybe it drops all the way down to $1, and maybe it goes all the way up to $10. So you're going to be marking levels of support all over your chart, areas where you're going to want to accumulate your stock. So let's mark $4, let's mark $2, and let's mark $1. Now let's also mark another level down at 50 cents. I know, crazy, right? Just stay with me and hear me out. Stock is approaching $4. You don't buy yet because you say, well, I think it can actually go all the way down to $2. Stock starts to drop down to $2. And this is great. It's getting to our level of support. We should definitely buy. Have patience. Let it drop to $1. Stock is failing this $2 level and starting to drop down to $1. All of a sudden, it looks like, hey, this is an amazing opportunity. We should definitely buy here. Hold on. Be patient. Let it burn to the ground and drop down to 50 cents. By doing this, you are only ever going to get into trades where you've taken almost no risk and you're seeing the maximum benefits up top. Say that stock actually went from $1 just to $2 before going all the way down to 25 cents. Maybe it hasn't seen its bottom at all and it's still dropping. Well, from $1 to $2, you have a 100% profit if you caught the exact bottom and hit the exact top. However, if you waited for 50 cents and that 50-cent trade went from 50 cents to $2, you now have 300% profit, 3 times what you would have made on the other trade. By doing this, you are constantly reducing the risk of every single trade you'll ever take. The only downfall is that you might not be able to take as many trades. However, good news. There's hundreds of thousands of stocks out there, so you should never run out of things to chart and you should never run out of positions to take these greedy entries on. Let me tell you guys, the best traders that I train are the ones who are willing to be the greediest traders possible. They wait and they wait and they wait patiently for the best targets to get hit. And if the trade simply never hits their target, they don't care. They move on to the next trade because there's literally tens of thousands, if not hundreds of thousands of stocks out there. So as long as they have all their stocks in line and they can just move in and out from one stock to another, it doesn't matter because when one opportunity is missed, there's simply another one a few minutes away. So by constantly having this reduction of risk, you are only exposing yourself to premium positions in day trading. And I think you and I can both agree that it would be much better to have constant premium positions that have massive payouts with almost no risk versus a bunch of wish-washy kind of mediocre trades that may or may not lose you money and will make less money in the end anyways. Okay, let's talk about one last thing before we go. Levels of resistance and where you should sell. Say we bought that stock at $2 and at $8 its target, it would be a whopping 300%. That's an amazing trade. I agree. However, there's a problem. What if you bought at 50 cents? Is it still going to hit that $8 mark that we thought? Not necessarily. Typically what happens when a stock goes to these extreme greedy levels, it doesn't rise to the same heights that it was proposed to go to prior in the stock charts when maybe $2 made sense for it to go to $8. That same 300% is made at $2. So from 50 cents to $2 would be the exact same gains as $2 to $8. I think it would be safe to take profits at $2 in this trade when you hit 50 cents and not shoot too high. While it may go to these extreme highs, you can simply take the same profits that you would have taken before in a much shorter and a much more clear and concise trade that has not only less risk, but an easier time getting to its target. Now, this stock may go up to $4 or $8 or $10, and you're thinking to yourself, man, why did I sell so fast? I should have held on. This is the wrong way to think about it. If you can make 300% on a trade that has no risk because you are super greedy, and that same target where you thought 300% was going to be made reaching to $8, you should probably just lock up profits and take your exit and move on to the next trade once it hits $2. A very simple and easy trade that you could routinely complete over and over and over and make a great career income out of it. So that's it for today's lesson. We learned about levels of support and resistance, and I shared with you guys an amazing tip that's sure to make you better traders. Just so you know, some of the best people that I've ever trained use this simple but beautiful rule in every single trade they ever take. While it may sound basic, it can be extremely complex. So in the next lesson, we're going to learn about trends, which, spoiler alert, is also a level.